Hi. So in previous video, we have seen that we have decoded the profit and loss account where we gone from sales, cost of goods sold, other direct expenses, then gross margins, then operating incomes, then we reduced it from other non-operating expenses like interest and finance expense, and at last we have also dealt with the non-cash expense also, which gives us a net profit, and we understood whole net profit. So if you had see that PNL video, I will urge you to see that PNL video. So in today's uh, session, we will see how to decode the balance sheet in a normal way. A balance sheet is so profit and loss is a statement which is for a whole period. So for an example of a year, a month, but a balance sheet is a position of a business as on a particular date. So there are the balances where you owe money or where someone else owes money from you. So now we will decode the balance sheet. Let me share my screen. Sharing the screen, opening the Excel. So the balance sheet normally comprises of various steps. We will see to it the major headings. So steps 1 is equity or shareholders fund. Second is borrowings. Third is current liabilities. So it's majorly for the credit side. Now for the debit side, it's a fixed assets. Then we have investments. Or we can even say other non-current assets. Then we have current assets. In current assets, majorly there are three. First is inventory. Second is account receivables. Third is cash and cash equivalents. As in the current assets, there are three major. In the current liabilities, major is the accounts payables, or we can say it as sundry creditors. So, supposingly we sold the goods for 1 lakh rupees. So, and it is in a credit. So then our account receivables will be 1 lakh rupee debited. And here a 1 lakh rupee will be a profit. But for that we have purchased some goods on credit. So for an example, we have purchased the goods of 50,000 rupees on credit. So 50,000 over here, and purchased 50,000 rupees. So this will be the case. Now if any accounting receivables pays us back, 1 lakh rupee he pays us. So then minus 1 lakh. And the same will be included in our cash and cash equivalents. But if we pays our account payables back, we have been paid, so we pays us. So this became 50,000, this become 50,000. So here how the account payable goes on. So equity shareholders fund is majorly a fund of the owners If it's a proprietorship firm, then it's for the proprietor. If it's a partnership firms, then all the partners fund will be there. It will also include the profit and loss for the previous years and the current years also. So equity shareholder funds is a capital account. It will include the capital account, reserves and surplus. Borrowings are if we have taken any loans or the capitals from that. So supposingly if we have taken a 1 lakh of a loan or a 10 lakh of a loan from, so then so now we have purchased some fixed asset. For an example, we have purchased for 8 lakh rupees. The cash and cash equivalent will reduce from 8 lakh rupees as we have paid for the things. But if we total it, comes to this. Then we again purchase some goods for 50,000. The account payables get 50,000, but its share remains as a inventory into inventory. Now from that inventory, we have sold some goods. Half of goods have been sold. So inventory becomes 25,000. But half of goods at 50,000 rupees. So here we have margins for 50,000 rupees. So here our reserves will be plus 25,000. So normally a balance sheet will be having an equal amount in the assets and equal liability side. So both will be similar as we are going with the double entry system. So as you know, there are the golden principles. The credit and debits, it's a double entry. If there is some credit, then there will be some debits. So we have a 2,50,000. We have made some investments. For an example, we have made some investments of 1 lakh rupees into some another what I say company. Then from here 1 lakh rupees we got, or we have even got some money from our partners. So 2 lakh rupees received from our partners. So here again the capital funds will be increased by 2 lakh rupees. So here you can see both are matching. So this is a part of a balance sheet. So again, I will say as per the what I say is industry segment or the things, the some of the items get plus minus, but majority of this kind of ledgers and structure of the balance sheet will remain same. So that's it for the today's lecture. So the P&L shows a report of a whole period, but a balance sheet goes on position on a single day or a particular day, what we are owing and what someone owes from us. This is known as. This also doesn't tell us what is the what is the full position of an entity, or it won't says where you are standing. So we can dissect it more towards a cash flow. So for the financial statements, we have to see as a P&L, balance sheet, and a cash flow as a jointly. So you can know where the actual positions and you can derive some values out of that. So we'll continue more on to the cash flows. Until then, if you have any questions or comments on the P&L or balance sheet side, you can definitely let me know. Or if you have any, what I say is any things which we should encapsulate into this kind of a things, P&L or balance sheet, kindly let me know. Okay, bye. Take care. Thanks.